Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bert and Lanny, your favorite dividend investors of all time. We are back on the YouTube channel, guys, to talk to you about a stock that just released earnings earlier this week. Let's see what's going on underneath the hood of this tech giant.
Before we do, subscribe to the channel. Give this video big old-fashioned thumbs up. Let's freaking go, everybody. Get our journey to 20,000 subscribers because we want to reach financial freedom with all of you too.
Guys, that's what it's about, getting to financial freedom. And guys, we're talking about Apple stock today. Ticker symbol is AAPL. Tim Cook and Apple released earnings earlier. Very interesting earnings release from Apple and what Apple's stock price had done post the release. But this stock has been on a tear this year, Bert. It is up about 43% this year. And also, it is up about 8.5% since this time last year. Obviously, we know 2022 wasn't the year for tech stocks, and 2023 really has been the resurgence as AI and other, cloud-based items take over.
Yeah, and anytime you're joining the 12-0 club for market cap, it's incredible, enough feat of its own. But they're not just 1 trillion. They're not just 2 trillion. They're almost 3 trillion of market cap. So this is, they're massive. There's nothing more to say about that. So when they report earnings, it matters. And when they launch a new product, it matters. And it sends shockwaves throughout the entire market. And it's awesome. So that's why it's pumped up for us to dive into these earnings and then run them through our screener to see if they're an undervalued stock to buy.
Yeah, when you think of Apple services, think of their cloud storage, their Apple Care, their Apple support. Obviously, they also have Apple TV, subscription. They have all of their then devices physically. They definitely have a great grip in that ecosystem of products. But how did that translate though, Bert? Let's go through Apple's stock earnings release here. How did that translate to the release? Because I'll say this, it wasn't all yippity hippity dippity skipper, was it?
No, it was not. It was not. The revenue was actually down 1%. It was 81.8 billion, still down 1%. Still though, despite that, they were able to save some expenses somewhere along the line because their earnings per share were up 5%. So it could be a combination of expense cuts, share repurchases, one of the two that are help learn the share count to juice up that EPS because we know they love putting that cash to work. And in fact, Lanny, it's a good segue into one other point we want to talk about them. What happened to their share count over the last quarter?
Oh man, that share count, I tell you what is wild. First off, because they have put out 57 billion. Apple has put out 57 billion towards repurchasing and buying back their own stock. In fact, versus last year to now, their share count's down. Again, this doesn't sound like a lot, but 3%. But 3% of your share count in less than 12 months is insane.
Yeah, it's a huge amount. That it's massive. And you're not talking small dollar amounts. I mean, imagine Apple trading at 179. The amount of money that's required to repurchase 3% of your share is no small feat.
No small feat. Again, putting out over $57 billion in repurchases. The big highlight right now is the services revenue, Bert.
Yes.
Services revenue from Apple was up 8.2% from last year. So they really are hoping and banking on the Apple services to really provide that revenue growth right now.
Yeah, and it's a bet they're making, and one that, it appears to be working despite the fact that revenue's down. They're still the servicing revenue, that recurring revenue that so many SaaS companies are starving for. And that's really the beauty of what Apple's done here by building everything into their ecosystem. Once you're in the Apple ecosystem, it's very hard to leave. Once you have the iPhone, the MacBook, the iPad, the Apple Watch, and AirPod, everything that connects, it makes it really difficult to leave. So signing up for that subscription is almost a no-brainer.
You're like the Apple Tube desktop computer, the iPod Shuffle. Once you have those products,
yeah,
guys,
you're never leaving.
Let us know first off in the comments who owns Apple stock. Secondly, let us know what your first Apple product was. For me, my first Apple product was the iPod Touch because I
Oh,
got it for free by doing offers online and I got a free one.
I love it. Mine, I think I wasn't big into the Apple game until after college. Mine was just an iPhone. I think it was a 5, I want to say. I think it was the iPhone 5 because we both got it like right around the same time. All right. So anyway, let's talk now about the balance sheet and some cash flow here. Their operating cash flow was 26.8 billion. So they're cash cows, and that's now just even without the 57 billion spent on repurchases. You take in the operating cash flow, you think their cash would be lower, right? No, they have $28 billion of cash on hand as of June 30th, which is an absolutely insane amount of cash on hand.
Is that FDIC insured? No, I'm kidding. So yeah, a lot of
It's in
cash
that
on
Apple
hand.
savings account.
Um, Now their operating cash flow, though, even though as strong as it is, it's actually down 10 billion on a 9-month year-to-date standpoint. So just keep that in mind that even though the cash flow is still strong, it's actually lower. So guys, lower revenue and increase by 5% to earnings per share because primarily there's a decrease in share count by 3%. Service revenue is up, operating cash flow is down. The balance sheet is it's great. I mean, again, it's not like it's bad. Their current ratio is about 1 and the quick ratio is a little bit over 0.9x. So what is this a great stock to buy? Is Apple a good stock to buy right now? That's the question. And we're going to run it through the Dividend Diplomat stock screener. We're going to look at the price to earnings list in the S&P 500. Look at that dividend payout ratio. We all know it's going to be very safe here. If we're going to look at that track record of dividend growth, with all this cash, with all this earnings, with all this revenue, dividend growth should be strong, right? Well, let's look at it. We'll look at the yield as a bonus metric, Bert. So what's going on with Apple stock?
All right. Well, let's take a look at this here. The stock price today was 179.80. Their forward earnings per share using the most recent quarter annualized, so multiply that by 4, gives you earnings per share of $5.04, a PE ratio of 35.67, well above the S&P 500.
Yeah.
But guess what? They probably are driving the valuation of the S&P 500. So it's no shock that
Yep. And this is a little bit of a conservative approach, even though the analysts estimate 550. So it's not like it's going to get any better. Like it's going to get better, but still in the 30s for the PE ratio.
Yeah, that's fair too. Still above the market regardless, no matter what. Annual dividend is 96 cents. Divide that by the $5.04. That's a payout ratio of 19.05%.
Safe as heck dividend. Because Bert, with the safe dividend payout ratio, with that as low as it is, that dividend growth rate should be really strong, right?
Right. But it's not. Their 5-year dividend growth rate is 5.67%. They have been increasing their dividend for 10 years, though. So they're marching towards becoming a dividend aristocrat. I remember when everybody was so juiced up when Apple finally announced that dividend. Everyone was begging for it, and they finally delivered on that.
And guys, that last increase was barely over 4%. Last one was just under, before that was under 5%.
Yeah.
So they're toying around with like a 1 cent raise right now.
Yeah, so let's see what their yield is. Obviously not going to be very much based on what we're alluding. Their yield is 0.53%.
So
Low yield.
low yields, 5-year average yield is 0.76. They're actually yielding below their 5-year average yield. So guys,
Yeah.
this is a growth stock.
Yeah.
My summary here is that I don't think dividend investors, I'm not going to say not to buy it, but it's not really a dividend growth stock. It's more of a growth stock that pays a dividend.
Yeah, I would agree. And it's clear that management prefers using their cash for the discretionary share repurchases that instead of putting it into the dividend, because when push comes to shove, you can always turn off the lever for repurchasing shares if you need the cash. You're not committed to that annual dividend where you'd have to eventually do a dividend cut if times got tough. Apple needs more operating cash flow for an acquisition for some other thing. They just stop repurchasing shares for the short period of time. That's the beauty of a share repurchase strategy. Not the best for dividend investors, but it helps the overall total return from a different point of view.
Yeah. So if you're looking for overall return, higher growth, Apple's a great stock. If you're a dividend income investor with a shorter time horizon and you're not looking to sell shares but live off income, you're going to have a dividend that grows, but it's going to be a low yield that grows at a slower pace, in my opinion here.
Yep. Well, I agree too. So we are both aligned here. So let us know what you think about Apple. Do you own them in your dividend income portfolio, or do you own them more in your growth oriented portfolio? Let us know in that comment section below.
Yeah. Do you guys individually own Apple stock? Are you happy with your Apple stock position within your ETF that you own? Again, as Bert said, let us know in those comments below. And also, guys, subscribe to this channel. Definitely give this video a thumbs up. Curious on your take on Apple stock. If you think this is a great stock now and forever, baby. And Bert, what else is going on with this community here?
Well, I'm kind of feeling good because we've had some subscriber growth recently. But still, if you're not with us, you're against us. Just remember that. So get out.
Oh man, guys, that was Bert and Lanny from the Dividend Diplomats. Over and out.